It wasn't so
Okay.
cool. Well, so today it's Rob Miller with Frontier Asset Management, CEO of Frontier Asset Management. We're doing standouts. What standouts is about is just having a conversation about differentiation, about positioning, competitive advantage, and just talking to cool people that lead cool companies. Rob and I have been friends for a long time. I think I met him originally through soccer, perhaps.
Yeah.
Anyway, we've been friends for a while, but tune in if this is your first time checking out Standouts. It's just a conversation. We do it live just to kind of elevate our game a bit and have some fun and share some value. So anyway, thanks again, Rob, for joining.
No, absolutely. Glad to be here.
So if you just kind of share a little bit of your background, where, maybe how you got to where you are today.
Yeah. So CEO of Frontier Asset Management. I grew up in Washington State. Went to school out there, and I came out to Sheridan, Wyoming in 1999. I had an uncle out here who was starting a finance company, and I agreed to come work for him for 12 to 18 months. And that was 23 years ago. So was not planning to be here long. I was planning to get back to Seattle or go down to Denver, or kind of a bigger area, but fell in love with Sheridan, met my wife here, and have a family here now. And really just kind of started as an analyst with Frontier. There was two of us at that time. And as the company's grown, taken on lots and lots of different roles. And in 2015, became the CEO and started, kind of where I'm at now. And there's kind of lots more to the journey that we'll probably get into as we go as well.
Sure. No, that sounds good. Did you ever think that you'd sort of be in this spot? Like, did you think you'd be running your own company, or is this kind of every day you wake up and go, wow, this wasn't really my plan, but here I am?
Yeah. So there never really was a full plan, I guess.
Sure.
I've always been someone who stepped into leadership vacuums, or when there was a need for leadership or a need to run something. If I believe in where it's going, I stand up and like to get my hands dirty. And I think that's kind of put me into positions where I've had the opportunity to do something like be a CEO. But I was never on a career track. I didn't go to college to be a CEO, right? I mean, my degree's in economics. I got a CFA, which is a chartered financial analyst. And so that really an analyst role, really wanted to kind of dig into investments and model investments and all of that. But the life changes and there's different things that you want to be. And I was really excited to jump into the role when that opportunity became available. But it was more of just enjoying leadership, I guess, and stepping into those opportunities when they came.
I love that, stepping into a leadership vacuum. I think many times it'd be hard for people to step into that when there's that gap. It's easy to maybe stand back and go, someone should do something.
Yeah.
We don't have a plan. And
Right.
I think to your point, like, there's opportunity there when you step into it and say, well, I'll steer,
Yeah. Well, there's multiple opportunities for it. There's different ways. There's stepping into the full vacuum, or there's stepping into when there is no leadership. But then there's that managing up. Sometimes there is leadership, but there's a leadership position, and there needs to be support and coming behind, and that kind of that concept of how do you mentor your manager sometimes.
Yeah.
Not that I've ever had to do that.
No,
But
no. Shots fired. No.
But that's another way. So you to encourage people not just to look at leadership as, okay, there's an availability, and it's not just the title, I guess, right? It's the project and those opportunities, what those can look like for you.
Yeah. No, that's good. Casey over at EMIT, he taught me this phrase. It was the guy with the plan is in charge. And I think about it a lot, because you get into moments where there's no plan and you're like, well, I can form a plan. And then
I can make one.
At the same time, you're like, well, that'll put me in charge, which I don't
Right.
know that I want.
Right.
Or the other is like, if I want to be in charge, then I should have a plan. And
Yeah.
I think that is
Yeah.
an interesting.
Definitely goes hand in hand.
Yeah. Like do you really want to be in charge? And maybe that's why some people don't step into that vacuum, is like, I'm
Right.
afraid, you know?
Right. Yeah.
No, that's cool. So, with regard to, well, actually, you mentioned your back or your degrees in econ. I don't know that I knew that. I have an econ degree as well. Did we ever
Okay.
talk about
I don't
that?
know if we've ever compared notes.
Yeah.
Yeah. I started, I was a big math physics guy. I started in chemical engineering,
Mm.
and that lasted for maybe one semester. And I took intro to economics, and that kind of changed courses for me. So.
What when did you know, like, oh, I think I want to get into this? Like, what was there a moment in that intro to econ where you're like, this is really interesting?
So I really enjoyed economics and hadn't made the move to finance necessarily.
Mm.
So was changing my degree for economics, not knowing exactly what I would do with that. The whole idea of a science around unknown outcomes, right? So there's all this math in economics, and it's supply versus demand, and you draw these great charts, and here's exactly how you should price your item. None of that works in reality, right? In reality, it's just, they're kind of suggestions. We can model things, we get close, man. If we can get a 70% confidence interval, we're really excited. So
It's like Captain Jack Sparrow. They're more like guidelines.
right. We're gonna go this direction, kind of.
Kind of. Yeah, it's like the compass. The little, like,
Yeah, right.
that way.
Yeah. So yeah, and so that's, I think, then had opportunities to get into finance later, but that was after kind of enjoying kind of the economics piece of it, and digging into those kind of those aspects of a different world. So in math, the answer is pretty finite. In physics, it better be finite. The bridge is going to fall over, right? And so it's interesting having these other disciplines that you don't, most people growing up don't have any exposure to economics and those types of philosophies and theories and things.
Yeah, absolutely. Well, and it's like, in many ways, I loved physics and then I loved econ, and they're both in some way kind of like functional math, in the sense of like, here's the real world, like here's, kinetic friction versus static friction. Here's,
Right.
Stored energy. Here's all these really actually interesting things. And it's just like the world we live in, and then econ is sort of this functional math in the sense that, like, yeah, you can make estimations, but it's kind of what I love about econ, I think, from being an entrepreneur, is like, you make a plan because it's valuable to make a plan, not because you should stick with the plan.
Right.
Yeah. And econ is a little, and also if you have a plan, when to diverge from it. You're like, oh, this is
right.
I've ran this a bit, and I kind of knew that if it looked like this, then I'm going to need to go down this path. So that's pretty cool. So it seems to me, from tell us a little bit about Frontier. What is Frontier? Like, I get a sense that, having a background in econ is pretty cool when it comes to the work that you do. Like, it doesn't hurt, I guess, is what I'd say. But.
Right. Yeah. So Frontier Asset Management is an investment advisor. We manage investment strategies for individuals. Most of those individuals are through other financial advisors. So it gets a bit confusing, because I consider us kind of B2B, right? Because we build these portfolios for retirement accounts, for individuals saving for anything you can imagine, and then we present those to financial advisors who may be really good at financial planning, really good at kind of client servicing, and then they outsource their investments. And so we spend our time investing 16 different asset classes all over the world, everything from bonds to stocks to you name it. So heavy into kind of the finance side of kind of economics being just kind of a small piece of that. But really building kind of investments for individuals that need to grow assets for whatever, lots of different reasons.
Yep. Yeah, sure. And what, and I want to avoid throwing mud, but I think what's really helpful at thinking about positioning and differentiation, what makes you different, is being able to identify what you don't want to be, what you don't want to do, like the ways in a market or in an industry that you just don't agree with philosophically or
Right.
anything, you know.
Right.
What would you say if you could kind of characterize like how is this just normally done? You know,
Yeah.
and I mean the niche that you provide. How is it normally done? And then I want to transition, and you can transition into it if you want, to like, why is that bad? And
Yeah.
and and again, I don't want to throw mud at any particular, person or group or anything, but I think it's important to kind of understand, and I'll kind of lead us into the next dialogue here. But if you could articulate that a little bit, I think that would be really helpful at trying to
Yeah.
figure out how
Yeah.
you.
And I'm gonna start one step kind of even before how everybody does it, because there was a national survey, and off the top of my head, I can't remember who does the survey, but they look at professions all over the kind of all the professions and the trust factor of those professions. Okay. The last couple of, and so I'm throwing shade at a completely different profession here, but for the last couple of years, financial advisors and the financial industry has been below lawyers. Lawyers are actually moving up the scale. Financial advisors are moving down. They're one of the there were maybe, I can't remember what the profession, there was like one profession that was below financial advisors. It's not a trusted industry. And for something that is so important to a lot of people, that trust relationship is so important, right? And the reason that it's not trusted is the way that people manage money, the way they interact with their clients, right? Do you feel like you're getting service as a client, or do you feel like it's a transaction for the advisor to make money? That they have their best interest at heart, maybe not yours. And that's everything from pay structures to commission, the way commissions are paid out, the way fees are charged, all those types of things that lead to that mistrust and people not understanding what's in their portfolio. So then back to kind of your original question, the way traditional portfolios are built, and most of our clients kind of fall in what we call a balanced strategy. So a balanced portfolio is kind of a mid risk. It's kind of maybe the foundation model, something that maybe in perpetuity, 10 to 20 year time horizon. So long periods of time. It's going to have a mix of stocks and bonds. And most kind of clients fit into that. Now we have stuff that's a lot more conservative, stuff that's a lot more aggressive, depending on the client. Traditionally, that's a 60% equity, so 60% in stocks, 40% in bonds. And a lot of times what happens is people take this 60% and maybe put it into a good chunk of that into US, maybe a little bit into international. And then they take their bonds and they may do a laddered bond portfolio. They may just do intermediate treasuries. They may just throw it in a bond mutual fund and let another manager decide how to do it. Most of the industry is doing that. A lot of the industry has gone towards passive indexing. So I don't want to make a decision if company A is better than company B. I just want to own both A and B and just not worry about it.
Yeah.
Yep. I just want, if the market goes up, I want to go up. If the market goes down, I'll go down. And so that index side of things is what a lot of the industry has gone to. The amount of money that's gone into index, either ETFs or funds, is staggering and away from kind of active managers. So what we do that's different is we're one of the last firms left still buying and recommending active managers. So we find mutual funds, ETFs, separate accounts that are, and when I say those three things, because and you're going to need to stop me, Josh, if I get in all these sorts of like technical terms, no. Right? For the general audience may not know. So like ETFs are exchange traded funds. They're a package of securities that you can buy like a stock, and mutual funds are similar to that.
I was going to ask you just one quick question before we get into what makes you unique. I wanted to package up a little bit like the way everyone else is doing it. I like to think about that a little bit as like this concept of like a cultural enemy. So just like the culture of your industry, there's good
Yeah.
things, bad
Right.
things, there's okay things, there's unique things, there's your style, whatever.
Yeah.
But if you could kind of capture, like, again, without throwing mud, but like what in your mind, and maybe this isn't necessarily your whole firm or everyone in your firm, but like in your mind, what is that cultural enemy? Like, how do you articulate that in kind of a summation sort of way?
So the cultural enemy would be um, the firm that really is in it for themselves, their glory, and not for their clients. They're hard to find, they're hard to know, but they do exist. That would be the ones that are doing what's easy as opposed to what's, and maybe right is a stretch there, but for a little bit of work you can add a lot of value.
Okay.
And so are you doing what's easy
or maybe best? What's
yeah,
easy or best?
yeah, or are you doing what's best? We have this phrase we use called millimeters matters, right? Because just grinding out a little bit can add a lot of value to those two clients. And realizing, we work with numbers every day, right? It's I see account numbers, values, we're making trades for those, but I don't see faces. I need, we talk about all the time about translating that number to a face. That may be their entire wealth that they have for the rest of their lives that they're drawing off of for their livelihood. Right? We need to take that serious. It's not just a number, right? That's their life.
Millimeters.
So taking that seriously. And
millimeters matter. Yeah.
Millimeters matter. Exactly. And so being able to, so firms that don't put that face, it's only a number, it's only AUM. In this industry, we measure kind of a lot of our firms by assets under advisement. So your AUA. I heard somebody heard a great kind of way to measure that. An advisor was talking about lives impacted was what they were using to measure their business. So the number of accounts, the number of you may have a grandparent, but you still have in that family that account's impacting. You may have 3 generations there, and all those lives.
No, that's really good. In the environmental world, we're working with this group that's doing some really cool things, and what they've done is they've taken a position of like acres restored, as a key metric.
Right.
So I think putting a face to the name and thinking about those millimeters, and there's a story about Steve Jobs. I think his like 3rd grade teacher had a massive impact on his life, more than any other teacher. And obviously he didn't finish college or anything, but there's an interesting story there because I think he tells us he tells kind of this narrative that, if you're only 1 degree off and then you run for 100 miles, where you were going to be and where you are is way different. Right. And I think it really applies to that concept.
Yeah. No, absolutely.
That's great. Okay. So we kind of talked cultural enemy. The next thing I want you to kind of think about, or with regard to what makes you unique. I love this phrase called like brand agenda. So to kind of encapsulate, like, what do you think, or how do you see kind of like, your agenda in a good way? I think agendas can be framed negatively or positively. They can keep a meeting in order, which I've been with you, which is really helpful to have you have the agenda. So if you think of Frontier as having like a brand agenda, do you think you could put into words what that sort of looks like, perhaps?
Yeah, that's an interesting question. I think our agenda is around risk and a little bit around taxes. And so that idea that we want everybody to know what their risk level is. We don't think that's in the industry, right? And that's something that we're trying to put out there, that we want everybody to know how much risk they have. And then kind of in the same breath of those other items that we talked about, we're trying to build trust and safety, right? We want to build that trust into the industry. I talk to my staff about that survey a lot because I think our client base, we score very well trust-wise with our client base, but we need to bring up the entire industry, right? And so I talk to my staff about it. It's like when you're talking to somebody, you're already 3 steps behind, just because of the perception of the industry. So how can you create more of this, more trust, be more reliable, overserve, do the project not because they're going to see it, because you did your very best on it, whether they recognize that or not,
Mm,
in order to kind of to bring up the industry, to get other people doing the same thing.
mm.
Competition's healthy that way,
Yeah,
right?
yeah, totally. Going back to one quick sidebar, I guess, around trust in the industry. Do you think there's any, and maybe this is my own sort of experience, but do you think there's, I don't know if it's an issue, I don't know if it needs changed or if it's just a reality that has created this, but it does seem a little like the amount of times over the last 5 years to 10 years that I've gotten hit up by people who frankly I just feel like are very unqualified to like advise me financially.
Right.
In my conversations with them, it's just like they don't really have the confidence. They don't have an I mean, and I'm maybe a unique in terms of business, like the
Right.
businesses and stuff
Right.
like that. So I get that. I can kind of, that's actually why I'm asking you the question probably. Is it a competence issue or an experience issue that has infiltrated this financial advising world that it's
There's
like, hey,
Yeah.
you take this test, you can like be an advisor. And again, I don't mean to simplify it, and I don't think it's that
Yeah.
way, but
So I'm trying to hold back before I really like go off on that subject, because it's true.
okay.
Um, the as far as the advisory, as far as kind of the servicing client side, this industry has one of the lowest barriers to entry anywhere. In order to be an advisor, um, isn't that difficult, right?
Mhm.
And you don't need that many clients to really start a business. So which is great for those who want to get into it, who want to do it, who have a passion for it.
Yeah.
But then you also get, and not necessarily bad actors, because
Yeah, I
a lot
know.
of those people you probably talk to you are great people.
Totally. Yeah.
Um,
No, it's
yeah,
like they're likable, but just a little incompetent.
yeah, yeah,
They're not, they don't have malintent, I don't think,
right.
you know?
We'll see, and that's where that creates a huge market for me, because the likable advisor who doesn't know how to invest, doesn't want to invest, right? That's exactly who we want to serve. And so that they can serve their clients. Now, hopefully they need to get expertise in certain areas. They need to be experts in
Yep.
financial planning or social security, or there's lots of different
Yep.
areas that people can specialize in. But that really creates a market for us.
Yeah,
In order
at the
to
very
do that.
least, the reality is there are people that entered a low barrier industry, and if they're accessing portfolios that you've put together, the likelihood, because your people care about the millimeters,
Yeah.
because they're thinking about the person, not just the advisor that's offering your portfolio, but the person behind that. You kind of
Right.
have the layer. That's the C when the B2B is,
Yeah.
is there.
Yeah. And then there's the other side. So you have that piece, but then you have those, just as in any industry, right? There are managers that are better than others, right? There's advisors that are better than others. And you'll see, and it doesn't necessarily reflect the size of their practice, but through conversations and ways, there's different ways to kind of bring that out, to figure out who's really passionate about what they're doing and how they do it, at the same time, which is, it's great that then those can, get a larger portion of the industry and work with clients.
Yeah, yeah. Oh, that's good. Going back to just you guys, you know, as much as you want to try to, like, how do you elevate the trust in the industry? There's also, the truth is, if you can elevate people's understanding of what you bring to the table, as far as that you are a trustworthy player,
Right.
to some degree, as many, I don't want to say bad actors, but as many low level, across the board as there are, you really do stand out in that way. Or you have the likelihood of doing that.
Right.
What are some of the other kind of key differentiators? Like if you were maybe if you were sharing with an advisor that was considering, like, what would you say that would, help them understand why you would be a better choice over some others?
So the way that we look at the investments that we invest in is the same way that an individual should look at their advisor, in my mind, because they're different but similar, right? So there's some components that we look at. One of the first things is ethics, right? I'm going to talk about a mutual funds here, but it translates to investment advisor. So has the fund manager ever been in trouble with the SEC? Right? You can look up on the SEC's website any advisor, any mutual fund manager to see if they've ever had issues there. If they've had, then there needs to be a conversation about that and why, and then you have to make this. A lot of times, those who have failed in the past fail again in the future, unfortunately. Do they have a passion about what they're doing? Do you find that they really love investing and that's what they want to talk about and they love that piece of it? Or does it feel like a means to an end? Does it just feel like another job that they're just pushing paper and it could be anything that they're doing? That passion, that's when they don't want to do the work, but they need to do the work. That's when they get it done, right? That counts, right? That counts in any industry. So, and you can tell when you talk to somebody if they have passion for what they're doing or not. Experience, have they done that a long time? When we look at mutual fund managers, we're looking for 10 plus years of experience in their area. So if we're looking for somebody who manages Japanese stocks, so they have 10 years of experience managing not just stocks in general, but actually Japanese stocks, right? US small stocks, the tech sector, whatever it is. We want to have long track records of experience. So they see up markets, they see down markets. They know how to react. There's nothing worse than when your financial advisor freaks out more than you are. And it happens because they've never seen a down market or don't know how to react to that. They've come from a different industry, which a lot of times is great when they come from a different industry because they have that experience and other components. But the first little bit as they get ramped up, there's something to watch there, and so let's say experience, passion, ethics, track record. You can look at what's it look like. So if they have experience, you can look at, okay, what's the experience been? What's the performance numbers been? Nobody's gonna be the best performer all the time. So you're looking for consistency, not someone who is great one time and then terrible another time, but but sometimes winning the day, sometimes maybe trailing, but consistently getting the returns that get you. Other things that we look at that maybe not necessarily for advisor that are kind of unique to us is we're looking for who does better when markets are poor. So when markets are going down,
kind of downside risk mitigation.
Yep, exactly.
And that's a big differentiator for you from what I gather.
That's kind of our positioning in the market. So there's different, you can be passive, low fee, you can be tactical, which means you're moving all over the place. We're in what we call downside first focus. So we lead with risk. So every strategy we want to have a downside risk target. So when we talk to clients, we can say, here's what you can expect from the portfolio. It's caveated at a 95% confidence interval and all the statistics and things behind that, but really giving an idea of how much risk you can expect. Not it's a 60% equity, 40% bonds, and so it's not as risky as something else. Not relative risk, right? This industry talks about relative, like aggressive, conservative.
Yep.
That's really hard to translate.
That works for me.
Am I aggressive or am I conservative? It's all relative. Compared to somebody else, I may be conservative. Against somebody else, I may be very aggressive. And so actually having a number, people understand if you have a portfolio and you potentially could lose 10%, well, that's a real number to you. You know what that means, as opposed to you're kind of conservative. We'll see. And so that's kind of our position that we put out there and look at.
So that's downside risk focused. That's what you said.
Downside first focus is the way we branded it.
Downside first focus. Okay. And you created that as like a brand or like a message, something that you say, that's who we are. So have you noticed anyone, I always say that like success breeds copycats.
Yep.
Kind of like a little bit like that story before we kicked off talking about in adolescence, like one of the ways you survive is by blending in or fitting in. Some of that's because if you see what's working for that kid, as a 12-year-old or whatever, you're like, oh, that's cool. Okay, I'll do that. So similar in business, have you noticed anyone trying to kind of copycat that category?
It's people are starting to do it on I wouldn't say as the center of their brand, but their secondary message is starting to have some of that weaved in there. We saw that it started probably 4 or 5 years ago is when we first started to see that kind of come in.
And when did you start using that phrase?
So probably 2015, 2016 is when we started using that.
And did you just see some white space? Did you see it like, man, no one's really focused on this downside first, like framework, like point of view, like, and you felt like, man, that's a spot we can be passionate about, that maybe we have experience in. Kind of going back through your list, how did you identify that as like a blue ocean, if you will?
Yeah, so we found 3 things that we don't think anybody of our competitors can claim. So we looked at the process, the way we manage. So we didn't change the way we manage money. We just started talking about it differently.
Nice. Yeah. That's a ton of what positioning's about.
Yeah.
The work.
Yeah, so we didn't change our product. Like our product had space. We just weren't framing it right for people. And so we had 3 things. The first one was downside first focus. The second we call manager match, which we're looking for a new term. We don't say that one a lot because we're not sold on the term, but the concept absolutely. And the third one is Wyoming, believe it or not. So we're based in Sheridan, Wyoming. We have got clients in all 50 states. We never used to tell anybody that we were from Wyoming.
Yeah, it was
back in 2001, 2002. Well, you'd be in LA pitching a client, and it's kind of like, yeah, we're in Wyoming. You're competing against people from Manhattan, Chicago, all over the place.
Yep. Wyoming has a brand that you were cautious to hitch your pony to, if you will.
And I didn't realize at the time how powerful the Wyoming brand is. And now we lead with it. We sell in every major metropolitan area, and people love the fact that we're in Wyoming. They wish they were here. We don't tell them where it is.
Yeah.
Right.
Yeah. No roadmap. You don't have a roadmap.
No roadmap. But that's a fun thing that we have. But we use kind of like what people ask us kind of what that is. We use a lot of the cowboy ethics phrasing and things of that nature. The take pride in your work, do what has to be done. Those types of things. The way we relate to that goes back to that trust side. We relate very differently to our clients and our advisors that we work with than we feel many of our competitors do. And it goes back to kind of who we are as being based out of Wyoming.
So as part of kind of your elevator pitch, or your like message map is another way, I guess, to say it, is you have the downside first. You have was it manager's match? Was that
manager match?
Manager match. We'll get into that. I'd love to hear more. And then Wyoming. Would you say in some ways, like that's like if you have an elevator pitch, you're like, hey, we're Frontier, and then you're kind of briefly covering
two sentences on each one of those. Yeah.
Okay. Talk about the manager match.
Yeah, manager match. So manager match is that idea of finding the best mutual funds, ETF, separate accounts. So a mutual fund will have someone who's investing stocks, bonds, managed futures, commodities, whatever. And there's a lead manager or a team that manages that. So we're looking for the best managers. I think best is a relative term that I probably can't use by compliance reasons, but looking for really good managers out there.
Well matched.
Yeah. That are doing something unique. But you look at US large stocks, I think there's 3,000 different mutual funds for large stocks. Maybe there's not, maybe it's only 1,500, but anyway, there's a lot of people managing those. And so how do you sort through those to find who's doing something unique, who is adding value in down markets, who is really good at their segment of the market? And we slice it all sorts of different ways. And, And I can go deeper into that if you want. But the second piece, which is something we don't talk about a lot because it's pretty complex, but no one else is doing it. And it's the way we combine managers. So if you have if you think you have this asset allocation pie that you created for your downside. So when we say downside first focus, that creates this pie. I want to have 15% in US and 5% international and 5% of commodities, on and on and on, right? Well, then to get access to those markets, I'm using ETFs or funds. And so looking at those, who's the best, but how do you select? You've got three that you think are really good. Well, do you just look at performance, right? Who was the best the last 3 years? Spoiler alert, whoever was best the last 3 years probably isn't going to be best the next 3 years.
Yeah.
Right. So how do you make that decision? One of the things that we did very early on in Frontier is we built this optimization process. So it is doing millions and millions of calculations of every possible combination of all of the managers that we really like. So we have a list of probably about 200 ones. We're looking to get just 12 for somebody's individual strategy. But looking at that list, we do an optimization of what's it look like to own 1%, 2%, 3%. And you can imagine the calculation if it's every possible combination of all those managers to see what's the best group together.
Yeah, it's like that's factorial at that point.
Yes, exactly. And so, but what it does is I'm not looking, so I'm thinking I need 15% in US large stock. I'm not just looking at picking between those stocks. I'm looking at how does my large stock manager interact with my international manager, interact with my fixed income manager, interact with my cash manager, all those people together, because there's little intricacies and things. And that way it's kind of, we do the analogy of, there's a Newt Rockney quote talking about, I don't want my best 11, but my 11 best, or probably the other way around, right? I don't need my 11 best individuals. I need my 11 best team members, right? Who's going to work together as a team and play their role.
Yeah, it'd be like the plus minus in basketball now. You're able to look and see how a player impacted the overall team based on their plus minus.
Exactly.
It's a phenomenal stat. Like
yeah. And so we put all those things. So this optimization
you gotta have a plus minus on your matching.
Yeah, there you go.
Pretty sweet.
Well, that's called attribution, right? So we have to do that every month to show kind of where we're getting all of our returns.
So you just use it as an analogy. Like you play basketball, it's like a plus minus. People will be like, oh, great. If they don't play,
then people will get it.
If they don't watch basketball, like, you have to use that as your qualifier. But
right. But that idea of then how it's a big process to get it, and then you try to break it every month. Right. So this ongoing, it's not, well, I have a portfolio. Good luck. We'll look at it in a year. We'll look at it in 2 years. We go back every 30 days and I try to fire every manager in the portfolio and see if I can add somebody better.
That makes the
overall thing either more return or less risk are the two kind of the things we're looking at. There's a lot of components to that, but that's kind of on a high level. And so if I can take out 5% of a fund and add a different 5% in and the overall picture is better, I'll do that. Most times I can't. Right. And we try it, like I say, and then 30 days later, I'll try to break it again and try it and over. And sometimes we'll get a new manager that comes in that we haven't optimized against before. And it may want that, or we change asset classes and all sorts of things are going on. But as you can see, it's a big process. That manager match piece is a huge, it's a huge math problem, basically. That, but it was kind of funny. Last night I was cleaning out my desk at home. The original name of Frontier was Investment Visions. And that name lasted for about 6 months. But I've got a business card that says Investment Vision that we printed on our own printer. And it says investing today the way others will invest tomorrow. And we were doing this process then. No one's doing it yet. We figured by now that we'd have lots of competitors basically competing on our own process, but we haven't seen it yet. It's kind of it's a fun thing.
It's really cool. Yeah. So I'm going to zoom out macro this a little bit from maybe an economic standpoint. When you look at being downside first, you're obviously looking at what things in a down will be up, to try to counterbalance at some level. And maybe that's not how you get it. I don't mean
absolutely.
I'm interested to know, like I was reading some kind of macro econ, blog or something, and they were talking how frozen food is like way up because when inflation happens, and fresh food starts to cost a little bit more and everything costs a bit more. It's like, maybe I'll just walk 2 aisles down and pick up some frozen stuff that won't go bad, that's cheaper. You know what I mean? Like it just has a lot of upside in a down, down market, if you will.
Yeah.
So I'm wondering, like, just, I don't mean to put you on the spot, but are there any interesting industries or segments of the market that in this particular, down that we're experiencing, that you're seeing, and maybe either you're surprised or maybe you're not surprised, that are doing well? I just think like the frozen, I love things like that where you're like, the other thing I think I saw is like lipstick is up,
right?
Because it's a pretty cheap way to just like feel better, come to buy some lipstick.
It's an easy way to feel your best.
Yeah.
So I don't spend a lot of time getting to that micro of a level.
I figured it didn't really apply.
But what we do, so it's all built up in your correlation matrix. So our correlation, basically, you're looking at all the different correlations between all sorts of different markets. And so, and it's just it's not as fun as frozen foods or lipstick, but looking at whole markets. So long-term treasuries have always the last 15, 20 plus years have been the major downside correlation to US equities. So anytime equities were up, treasuries were down. Anytime the equities were down, treasuries were way up. And it was a big difference in correlation. But with this run in inflation is kind of wiped out that that correlation piece. And we have, and a little bit of kind of what the Fed's doing and how all that plays together. And so the correlations for a lot of asset classes, we don't have big negatives like we had to work with in like 08, 09. But we're seeing there's an asset class called managed futures, which has been negatively correlated, which is you think of the futures market. So like futures on stocks and commodities and currencies and interest rates. And right now, a lot of those are short. So they're short the market, and they're short stocks and bonds. And so it gives us a diversifier against both of those that we're seeing. So that's one area where we're getting some of that diversification play. But on those individual industries and things, that's where we depend on the managers that do a great job. So, we can see it like the US market, we can kind of cover the US market. You can see we get the news, we can hit play, but try to do that same calculations on the Asian market, right? Or in Europe. Like I can't, build a portfolio of 100 Asian stocks for somebody, but Matthews can. Matthews out of San Francisco, they've got, I think, 25 analysts doing 200 plus company visits in Asia every year. They speak Mandarin, right? So if I want to know the best companies to invest, that's who we call, that's who we use. And so a lot of those stories come from those individual fund managers.
Yeah, it's really interesting. I was wondering maybe what your, I mean, there's a ton of good stuff chalk into like the time that we spent together just now. But I'm trying to think like what a question that's someone might be like trying to figure out how they're position their business, trying to figure out like what is positioning, because it's kind of, I don't think it's new, but we talk a lot about like macro, like the world talks about brand and talks about like marketing and maybe pricing, and it talks about all the parts that come into play with positioning. And there, like I said, there's a lot of little bits and pieces that you can kind of read between the lines. But when you kind of zoom back and you say, this is when you got involved in Frontier, and in 2015 we saw this like white space. We were already doing it, but what tips do you have for having maybe some eyes open for that white space? Like what, because I think it's really easy to get lost, like, and forget, just forget to position. You're just like, do everything. And we work with a lot of different clients, and they oftentimes are doing things that are pretty darn unique, but they're maybe afraid to brand it because they're like, well, why would we brand that? One example, like not a client of ours, I wish, but the iPhone, they call a slow-mo selfie a slowfie, right? They're notorious for like branding it, claiming it,
Right.
branding it, naming it, claiming it.
Yeah.
You just take stuff, and then Android users are like, oh, we have that too. And they're like, well, what is it called? And it's like, well,
right.
it's not called that. And you're like, well,
Right. Yeah.
I don't know, if I can't name it and I can't talk about it, I can't tell others. So sometimes just that naming it piece is like, hey, we just need to frame this thing. We need to own it, And so anyway, with that, I'll stop. But if you have any tips at like not getting buried, because it's just easy to get lost.
Well, I think that what was really helpful for us, that exercise of coming up with 3 things that none of our competitors can claim, and just what are those? And so really looking, so you have to know your competitors enough to know where your advantages are, where your differences are. Yeah. And maybe you don't have any, but you have a competitive advantage on price, and you can produce your product for much less than they can. And then you just tag onto their branding, and you continue to make your profit. I mean, you don't have to be known the world over. A lot of times to still have a great business, depending on where you're trying to be.
It's almost like think big, but you don't have to think big. You don't have to think super big. You can think about how to win in this one niche, in this one moment in time, that you can build a good business in.
Absolutely.
That's great advice.
Yeah. If you've got that margin, that's where you go.
That's awesome. That's way cool. Well, yeah. Did we miss anything?
I think the one thing that I talk about a lot when I talk about Frontier is culture. And we haven't really hit on that piece of it. So all this, all the branding and positioning, that's all great, but that's all lip service if it's not backed by your culture and your people. And I think it's for all the great things that we've done with downside first focus, and the way we build our investment strategies, and the way we interact with some of the best financial advisors in the world. It's because of my staff that really perpetuate that, and their trust, they're liked. You can have the greatest product in the world, but if no one can stand being in the room with you, it's really hard to continue to put that forward. And so we work a lot on our culture here. We've done things, we've defined our culture, and then we use it to hire. We use it to kind of continue to put the things forward that we want to put forward here. And I think one of the things that we've just added recently, which I've always struggled with, that mission statement to change the world. And sometimes you don't have it. I mean, we're helping a lot of people, a lot of clients, but we're not curing cancer, right? We're not, and some people get excited for that, and some people don't. But so we really try to focus in on the staff that everybody's here, their work matters, right? I don't want anybody to feel that they're just pushing a pellet bar that somebody else could do. That they matter, their work matters. Financial opportunities for everybody. And then the third one that we really we go for, because this is what helps in the good times and the bad times, is enjoy the journey. If you're not enjoying your time together with the people you work with, everybody's great when things are going great, but when things are rocky, when unexpected things come and you got to dig through it, it's easy to start throwing blame and going. But if you're enjoying the journey, if you truly enjoy the people you work with, it helps to get through those times. There's more trust. There's more. You give people a little more of the benefit of the doubt, and you can continue to move through those things. So, in order to deliver everything we've talked about, you really got to focus on your culture to make sure it's in the right spot.
No, that's really good. I think we've probably talked about it, but I think, I don't know, maybe I've said this every standouts I've had, but there's a Peter Drucker quote that's culture eats strategy for breakfast.
Right.
And positioning is strategy, and strategy comes from people. you know?
Mhm.
And
Right.
if it comes from just a person, like you or me as leaders of companies, like it's got to be adopted. It's got to be a part of the people, you know?
Right.
And yeah, I mean, I think we can push an agenda to a certain degree and say, hey, this is what we're about. And kind of, you know,
Yep.
I think you probably feel the way I do sometimes. Like you're just like, man, I think I've been saying the same stuff for 10 years, you know,
Right.
like
Right.
I
Right.
think
Yeah.
some level every day I wake up and say the same thing, you
Yep.
know, because it's just like fundamentals of
Mhm.
business and leadership and trying to create a culture. And at the same time, I feel like even though I say the same things, you know, for a decade or whatever it is, and then I look back, I'm like, I was an idiot, you know, I really messed that stuff up, you know? And so even if you say some of the same stuff, oftentimes I think it has maybe it hits a bit different and the
Yeah.
intention is better. And, you know, the execution of that message, you know, is a bit better. But I was going to ask one maybe final question, kind of related to culture. I was sitting on some business meetings last week, and I was sort of asked the question, somewhat rhetorically, but it had to do with like it kind of was. What was it? It was like, oh, well, what do you do to like you can't pay for or what do you do to make a better culture? You know,
Yeah.
and I think it's an interesting question. I think the answers can be profound, but I also think the answers can and really should be different for every business because you're talking about trying to impact a culture that already exists. Like culture's there no matter what. If people are
Yeah.
around, there's culture. It's good, bad, indifferent, apathetic, whatever, you know.
Yeah.
But if you were posed with that question, maybe even as the context of what you think about with Frontier and how, and maybe you just look back and say, what have you done? But also like, what tips might you have? What do you, yeah, like, how do you impact culture?
Yeah. So we started, I think our current kind of culture words and phrases came from, it's probably 5, 6 years ago now. And I took all um the manager level and some staff, and we spent a day and a half really trying to define the culture that made us successful to that point. Right. And so if you want to trying to identify kind of the culture pieces that made us successful, and I asked, the managers and staff will tell me what the culture is. My directors, they give me the aspirational culture, right? Because they're trying to think ahead, what's next.
One's looking back and one's looking forward.
Yeah. And so they'll tell me where we want to go, what they want the culture to be. But I wanted to know what the culture was. And we got a great phrase. We've got every year, every quarter, we go through one of the elements of our culture. Say, is this still true to who we are? Yes or no? No. Okay. Do we want to take it off, or do we need to get our culture back to that? And so we review it. Then every year we go through all of them. Okay, do we need to add a word, take something off? Does this still fit us where we want to go? But then being very intentional about that. And so that's quarterly with the directors, monthly. I mentioned it to the staff. We're not to this point yet, but we're going to start doing each week where there's a theme of the week for that talks about our culture and who we are. And every meeting that we have in the firm will start with that. We'll start 30 seconds on what that cultural piece is. And so you don't change a culture overnight, right?
No.
You need to make sure that one, you know what your culture is, right? And the good elements of that you want to reinforce, because it's easier to reinforce something to completely change it. And then you can slowly start to work other things in. But you got to be committed to the process, right?
I think we should say that again real quick. It's easier to reinforce things than try to completely change it. And I think there's a
Yeah.
really powerful leadership lesson, I think, in that. That's
Reinforce the positive ones.
profound. Yeah. I always think of the word culture. I can't help but think I have this little disc in my hand, but you know, the Petri dish, you know, like you
Huh?
had, I always think every time I hear the word culture, all I can think about what grows in a
Mm.
Petri dish.
Yeah.
You know?
Right.
And the culture is kind of that way. It's like there's stuff that impacts that dish.
Yeah.
Right? And the dish is kind of the walls of your organization, digitally or physically or anything like that.
Yeah.
And it's just like what grows in that thing, you know,
Yeah.
because it's going to grow, good or bad, you know.
Yep. There's a technique that the EOS system traction, right? And they do the people analyzer, right? And they take every one of your staff and you grade them against each one of the components of your culture, right? And everybody, all your staff needs to be like 80, 90%, or there's some tough choices that need to be made.
Yeah.
And that's it's when you do that exercise, you kind of sit there and you're like, gosh, I know the answer, but I don't want to commit to that. So, or you see, well, nobody has this element of our culture. That's actually not a piece of our culture.
Yeah.
Right. So if we're going to try to move that direction, that's a different deal.
So when you talk about examining your culture, you're talking about like an objective, like word or phrase. Are these also just your values? Are these, when you talk culture, are they your values? Okay. You're not talking about a separate set of culture traits or things like that.
Yeah. Nope. It's our values: authentic, passionate, trustworthy, visionary, compassionate, team oriented. Those are ours. And I got in trouble. I said this last week and someone called me out on it because I guess I was wrong, but these aren't found on our website anywhere. I guess they are. There's one sentence on our website that has these in there, but we don't use these to sell, right? Maybe to sell to bring an employee on.
Yeah.
But I don't have these because I want financial advisors to do business with us or other people to do business with us. I have these to be who we are. So I try to hold them sacred for us. I feel like it's our thing, and not, because I think if we were using these to market, they would be a little different. But it also doesn't feel the same. It feels like you're putting on a show as opposed to who you really are. So we hold these fairly close to ourselves.
Yeah, that's interesting. I've heard kind of mixed perspectives on whether you put those and you kind of like tattoo them and you just like bleeding heart the values, like this is what we're all about, and I don't necessarily think that's bad. I think it probably depends on the culture. It depends on the leader, the style, the location, who your customers are, what industry you're in. But it is interesting because I hear like I hear people say that, and then I hear other people say like, oh no, we gotta have.
And I love to hear other people's cultural values. So I like when other people present it. But one of ours is trustworthy, right? And if I put trustworthy across my website, I would hope you would ask, like, why are they telling me that?
Yeah, if you're telling me that,
if you have to tell me that, something might be wrong. I'd actually just like, why don't we just show you that?
No, show instead of tell. Oh, that's true.
But so it's like, kind of weird.
Rob,
I like seeing others. So I don't know.
Totally. Well, it's like if I'm like, Rob, I'm a really honest guy.
Right.
Like,
well, I thought that until you told me that.
Until you told me that. Now I'm a little freaked out. Yeah, I was going to give you a bunch of money.
I don't know where to go with it.
But no, that's great. That's great. Well, hey, Rob, this has been awesome. We cracked over an hour, and I've kind of honestly feel like we could probably talk another hour, and it would be fun and good stuff. So we'll just have to do it again at some point, either with people watching or just on our own time. But I really appreciate you sharing some knowledge and some truth bombs and just some really cool things around positioning and what makes you guys unique. So it's been sweet.
Thanks, Josh. It was great. It was a ton of fun to talk to you, and I'd love to do it again. So.
Heck yeah, cool. And everyone that's tuning in, thanks for joining. This has been Standouts. We do this, it's probably been once a month now at this point, but it's always a good time to get with other business leaders and talk about what makes them unique and what makes them stand out. For me, it's like I want to talk to people who, from my perspective, they stand out as individuals, and Rob's totally one of those. And then his company is definitely one. So anyway, I'm going to tune out of the live here, Rob, and then we can keep chatting for a minute. Thanks everyone for joining.